Welcome back to XRP Matrix. XRP just touched $1.05, and if you've spent even a few minutes on social media this week, you've probably seen the same story repeated over and over again. Some people are calling it proof that XRP is finally ready for a massive breakout. Others are convinced this is nothing more than a temporary bounce before another painful drop. But here's the fascinating part. While the crowd is arguing over every penny on the chart, some of the smartest money in the market appears to be focused on something completely different. They're not obsessing over today's candle. They're not watching every hourly move. Instead, they're paying attention to a series of developments quietly unfolding behind the scenes. And if those developments continue moving in the direction they are today, the price action we're seeing right now may not be the most important part of the story at all. Because sometimes the biggest opportunities appear when everyone is staring at the wrong thing. The truth is that markets have a strange habit of creating maximum confusion at the exact moment clarity is beginning to emerge. That's why major bottoms rarely feel comfortable. They don't arrive with headlines announcing that the danger is over. They usually arrive when investors are exhausted, when confidence is low, and when people have stopped believing that anything positive can happen. That is exactly why XRP sitting around $1.05 has created such a divided reaction. For some investors, it's a disappointing reminder of how far the asset remains from previous expectations. For others, it's a signal that the market may be quietly building a foundation while attention remains elsewhere. And if there's one lesson history continues teaching investors, it's that crowd psychology often matters just as much as fundamentals when determining where prices move next. What makes this moment particularly interesting is the broader environment surrounding digital assets. Across the crypto market, we're seeing signs that institutions are becoming more comfortable engaging with blockchain technology than they were just a few years ago. The conversation is no longer centered solely around speculation. More attention is being placed on infrastructure, tokenization, payment systems, and real-world financial applications. That's important because XRP has always been positioned differently from many other cryptocurrencies. While some projects focused primarily on decentralized applications or digital collectibles, Ripple spent years concentrating on payments, settlement systems, and financial connectivity. That distinction matters today because the conversation among governments, regulators, and financial institutions is increasingly moving toward exactly those areas where XRP was originally designed to operate. At the same time, there's another factor many investors may be underestimating. Regulatory clarity remains one of the largest variables affecting XRP's future. For years, uncertainty has acted like a weight hanging over the asset. Every announcement, every legal update, and every policy discussion has influenced investor sentiment. That's why smart money isn't simply watching price charts. They're watching policymakers. They're watching legislation. They're watching how governments around the world are choosing to classify digital assets. Because if regulatory uncertainty begins fading, the impact could extend far beyond short-term price movements. It could fundamentally change how institutions view XRP as part of the broader financial ecosystem. And when major investors evaluate opportunities, they often care more about future accessibility than current volatility. Another reason sophisticated investors remain interested is because of the growing discussion surrounding tokenization. Around the world, financial institutions are exploring ways to bring traditional assets onto blockchain networks. Bonds, securities, real estate interests, and payment systems are increasingly being discussed within tokenized frameworks. This isn't happening in one country or one market. It's becoming a global conversation. When institutions start evaluating infrastructure capable of supporting these systems, they naturally begin looking at networks built for speed, efficiency, and interoperability. XRP and the XRP ledger frequently appear in these discussions because of their focus on settlement and value transfer. That doesn't guarantee success, but it does explain why some investors continue paying attention even when short-term market sentiment appears uncertain. One of the biggest mistakes retail investors make is assuming that price always reflects value in real time. In reality, markets are often delayed. Sometimes important developments occur months or even years before they're fully reflected in valuations. Think about how many technologies looked insignificant before mass adoption arrived. The investors who benefited most weren't necessarily the smartest people in the room. Often, they were simply the people willing to remain patient, while everyone else demanded immediate results. That's part of what makes XRP's current position so intriguing. The asset sits at the intersection of payments, regulation, tokenization, and institutional adoption. Whether those trends ultimately translate into higher valuations remains uncertain, but the fact that they exist explains why professional investors continue monitoring developments beneath the surface. There's also a growing recognition that global payment systems are evolving. Cross-border transactions remain expensive, slow, and inefficient in many parts of the world. Financial institutions understand this problem. Governments understand this problem. Businesses understand this problem. The search for solutions has created enormous interest in blockchain-based settlement technologies. Ripple has spent years positioning itself within this conversation. While critics often focus exclusively on price performance, institutions tend to evaluate utility differently. They ask whether a network solves a meaningful problem. They ask whether adoption is increasing. They ask whether integration opportunities exist. Those questions don't always produce immediate price reactions, but they often determine long-term outcomes. And right now, those are exactly the questions smart money appears to be asking. What many investors miss this week is that sentiment and fundamentals are moving in different directions. Public enthusiasm may still be recovering, but institutional conversations appear increasingly active. That's not unusual during transitional periods. Retail investors often react to price first and developments later. Institutions frequently do the opposite. They study developments first and position themselves before public attention arrives. That difference in approach can create significant gaps between perception and reality. When XRP touched $1.05, many people saw weakness. Others saw uncertainty. But some investors saw an asset sitting near major developments that have yet to be fully priced into market expectations. Whether they're right remains to be seen, but understanding that perspective helps explain why large players sometimes behave differently than the crowd. Of course, none of this means risk has disappeared. Markets remain unpredictable. Regulatory decisions can take unexpected turns. Economic conditions can change rapidly. Interest rates, liquidity, geopolitical developments, and investor sentiment all continue influencing digital asset prices. That's why experienced investors rarely speak in absolutes. They understand that probabilities matter more than predictions. Instead of asking whether XRP will definitely succeed or definitely fail, they focus on understanding the factors that could influence future outcomes. And right now, several of those factors appear more favorable than they did during previous periods of uncertainty. That doesn't eliminate risk. It simply changes the conversation from speculation alone to a broader discussion about infrastructure, adoption, and utility. Another development worth paying attention to is the growing involvement of traditional financial institutions in blockchain research and implementation. Banks that once dismissed digital assets are now actively exploring tokenized systems and blockchain settlement solutions. Large organizations rarely move quickly, but when they do move, their decisions can influence entire industries. This gradual shift toward blockchain integration is creating opportunities for networks already designed with institutional use cases in mind. XRP's supporters argue that this trend strengthens the asset's long-term potential. Critics remain skeptical, but regardless of which side you favor, it's difficult to ignore the fact that institutional engagement with blockchain technology continues expanding rather than shrinking. The psychological aspect of investing may be even more important than the technical details. When prices are falling, fear dominates conversations. When prices are rising, optimism takes over. Yet some of the most successful investors build positions during periods when uncertainty remains high. They understand that consensus usually forms after opportunities become obvious. By the time everyone agrees something is valuable, much of the upside has often already occurred. That's why smart money frequently looks for disconnects between public perception and underlying developments. The current XRP environment contains exactly that kind of disconnect. Public debate remains focused on short-term price movement, while deeper conversations revolve around regulation, adoption, infrastructure, and institutional participation. As we move through the rest of the year, several catalysts could influence how this story develops. Regulatory progress, institutional partnerships, tokenization initiatives, payment network expansion, and broader crypto market conditions all have the potential to impact sentiment. None of these factors operate independently. They're interconnected. Positive developments in one area can create momentum in another. Likewise, setbacks can slow progress across multiple fronts. That's why experienced investors continue monitoring the bigger picture rather than reacting to every headline. They understand that major trends are usually built from a series of smaller developments that gradually accumulate over time. So when people ask whether XRP hitting $1.05 matters, the answer may be both yes and no. Yes, because price always matters to investors, but no, because the most important story might not be the number itself. The real story could be what is happening behind that number. While the crowd debates whether XRP is going up or down next week, smart money appears focused on whether the infrastructure surrounding digital assets is quietly becoming stronger. And if that trend continues, today's conversations may look very different a year from now than they do today. At the end of the day, markets reward those who can separate noise from signal. The noise is easy to find. It's loud, emotional, and everywhere. The signal is usually quieter. It lives inside policy changes, adoption trends, institutional behavior, and long-term developments that don't always generate immediate headlines. XRP at $1.05 has become the center of attention, but the investors making the most informed decisions may be watching something else entirely. They're watching whether the foundation beneath the market is becoming stronger. And if they're right, the thing everyone missed this week may eventually become the thing nobody can ignore. Thank you for watching XRP Matrix. Stay informed, stay patient, and we'll see you in the next update.